There we go, Lambos. Oh yeah, dude, I was reading about this. Japan sure sounds like it's less real than we're presenting it for now. Yeah, I'm trying. Dude, the Pal Trump interaction definitely had me cracking up today. I did see that gigantic spy flow today on those calls. It's wild. It's a wild bet. Yeah, we got the burnt peanut here. Yeah, it was a good day for scalpers on SPY. I had a couple good ones, a couple on QQQ as well. It's pretty dang fun. That video swing though, that's the highlight. Always nice when you get a swing set and just catch just to continue to rip up, you know. We were up nice from that close yesterday. Only one I was real well, I was sad I missed one of the bounces, but I'm just hope T gives me a decent pullback. I think those earnings might be the thing that finally pushes it towards that 30. On what? What did we do? Spy? The spy up $9 this week. Oh, yeah, it looks like it in 4 days, pretty much. Ripper, nonstop. Welcome everybody. We'll give it a few more minutes here. Hope we all had a good day. Nice, love to hear that. Yeah, and scalping, like, I mean, it's fun and I love to do it. That's like why I do it, but it's just for as long as you can train yourself to understand you're looking for base hits. I mean, sometimes you catch the ripper. I mean, we hit these QQQs today. That was a nice one. I mean, we didn't know we were bottom ticking it at the time, but as long as you understand you're looking for base hits, that's when scalping starts to become a whole lot easier. When you just follow your plan, like cut and dry, no questions asked. And you can definitely pad your pocket a little bit by doing it. You can also get real burnt out just staring at charts, waiting on candles all day. So that is the double-edged sword of it. Welcome everyone. We'll see how many people come to this class. It's kind of like I said in my post, even it's kind of a weird one. Not everybody will even care about it, and it's definitely not something that's necessary for trading, but it can be an interesting thing to do. Yep, exactly. Just do what the chart tells you to do, you know. That's all we can do because, you know, we start putting our opinions or things like that on it and we can real quickly get hurt. So all we can do, let those charts tell us what to do. You know, sometimes we're going to be right, sometimes we're going to be wrong, and that's just trading. Yep, patience is what gets everybody, you know, and that's why I mean, oftentimes in voice chats and stuff, when people ask me about trades, they don't like my answer because my answer is almost always either you're chasing or wait for a pullback, you know, and that's, I mean, that's how I trade. Just sit there and wait for the trades to come to you. You'll dramatically reduce your risk, dramatically increase your reward, and hopefully it works out for you, you know? Dan, how you doing? Good to have you. That was just a grinder, huh? Did get that real nice breakout on this thing. That retest Tuesday or whatever was probably the one to get in there and stick with it. Okay, give me one more second. Gotta make another post real quick. Okay, second. Okay, welcome everybody. Happy to have you here, Dirty River. Tonight we're talking something just a little more unique in the market. It's not necessarily something that everybody needs to look at. These things that we're going to talk about aren't something you need to pour over all the time. I will say, if you're, you know, a big data trader, if you like, you know, if you like using gammas and things like that, you know, this is just another way to give you those very broad pictures in the market and be able to kind of see where it stands. You know, market internals, they're just, you know, they're an instrument in the market that gives us an idea of what's going on big picture. They show us, you know, how much buying, how much selling is going on, expected volatility. You know, we're going to talk about a few different ones tonight. Is there more, you know, is there more buying on the downside? Is there more buying on the upside? You know, like our pops continuing to be purchased, that type of thing. And so these are all ways to kind of clue you in on the market. And basically, what I use, we're going to talk three different internals tonight. Two of them I use mostly to identify overbought and oversold conditions. And when I'm discussing overbought or oversold or things like that, I'm not talking RSI. To me, RSI is a very useless thing. I want to know, you know, real big picture. You know, have we been buying a little too much and can we expect a small pullback? You know, not only intraday, but big picture, or have we been just getting clobbered? And at a certain point, you know, the only thing left is buyers. Once all there's been is selling, eventually there's only buyers. And so these are the instruments that I personally like to use to identify those overbought or oversold conditions. And they can also give you, on occasion, a hint of things that might happen in the market. You know, one of them that we're going to talk tonight, first one we're going to talk tonight is ADD. And it's one that can often be a very powerful tool to say, are we going to keep buying? Are we going to keep selling? Or can we kind of look for a little bit of chop in the market? And so with that, we're going to get into it. This lecture, you know, we're talking three things. The main ones we're talking tonight, ADD, tick, and then VIX are the three that we're going to talk about tonight. It's not necessarily going to be an hour. It is going to be just a little, you know, most of these things I pay attention to, but they aren't crucial. So we'll be able to get through them pretty quick. As I've been doing in all the recent lectures, going to leave microphones unmuted. If you have any questions as I'm going through it, if I go through something too fast or too slow, or you just don't get what I'm saying, definitely make sure you speak up a little bit, because like I said, these are kind of weird things in the market. I know, Crash. Oh God, you're right, dude. Don't say that name. It's like Beetlejuice. So these charts are a little bit weird. Well, two of them that we're going to look at are a little bit weird. And when I say a little bit weird, I mean a lot of weird. So the very first thing that we're going to, oh my God, we're going to look at is ADD. And so it's the advanced decline difference. Sounds fancy. Basically, what they're telling you is, so what ADD tracks is it tracks the 2,800 or whatever it is stocks that are traded on the New York Stock Exchange. And it looks at how many of them are advancing. And what do we mean by advancing? The price is higher than the close price of the previous day. So, if SPY closes at 630, it's trading at 631. That is advancing. The other side is declining. If it closed at 630 and it's trading 629, it's declining. So what ADD shows us is the difference in those. So I'm going to pull up the chart now. On Thinkorswim, if you want to pull this up, you have to do money sign ADD. And that will pull up the ADD chart for you. Unfortunately, I mean, I'm sure Webull or TradingView likely have these as well. Maybe, I don't really know. Robinhood likely does not. But I don't know how to look it up on there if you do have it. So you can see this chart right here. It's mayhem. I should start all of this with ADD is a non-tradable instrument. All it is for us is oh God, there he is. All it is for us is a tool to look at how the market is performing, very big picture. As I said, it tracks 2,800 stocks. So you can see the number goes much higher. It is virtually never going to, it's never going to get up to these major extremes, generally speaking. Because it's not tracking that many things. And also, it is almost impossible for all of the things on the New York Stock Exchange to be advancing. Some of them have to decline. There's inverse ETFs that are traded on there. So something's going up, it's going down. So you will never really see a 2,800 reading. Well, you see right here in the middle, and I know mine's at 0.06. ADD is not something that you chart. You don't do technical analysis on it. You don't do anything like that. When I look at it, I am personally very rarely concerned with what the actual number is. Oh my God, you guys are cracking me up with what the actual number is reading. I am much more concerned with the trend, the direction that ADD is moving, and are we above or below the zero line? So what do I mean when I say the zero line? You can see it's right here, dead center of, dead center of the chart. I have 0.06. That's because I've never moved it to the actual zero. And so what does that mean? It means if we're above it, we have more stocks than the New York Stock Exchange advancing. If we're below it, then we have more stocks than the New York Stock Exchange declining. That's all we're going to use it for. So you can look at it on the 5-minute and it's going to be crazy. You're going to see big gaps all over the place, whether it's gap up in the market, gap down in the market, those kinds of things. We just want to take note of what is ADD doing. Like I said, this is not something you need to pour over every single day or anything like that. But it's something that can kind of give you little sort of hints to say, what is the market going to do? So if we pull this up, and I'll always have it on just a little small chart on my screen, I don't think it's anything super important. You can see that today, SPY, maybe it gapped up, maybe it opened right around where it was, I don't know. But not a lot of movement on SPY on the overnight session. ADD, on the other hand, really gapped down. And so we see it trading below the zero line. We do see a nice bounce off the open as SPY pushes up. And then it basically just proceeds to go sideways. We never really develop a good trend on ADD. I mean, we obviously had one in early in the morning, also when we had a nice grind up in the market early in the morning. And then we really started going sideways. So what can we gather from this? we can kind of say to ourselves, hey, the market's going to chop. We can look for some trading range activity because we know, SPY's pushing up, ADD, it's telling us that there's more stocks actually going down or at the very least trading below their closing price yesterday. So until these really start buying, you're never really going to see that nice breakout on SPY. On the other hand, we can have a day like yesterday where we consolidated. We can see, we're pushing that 800,000. As I said, the numbers don't really matter, but we know there's a lot of buying going on in the market. Most stocks are going up. And so, or at least above their closing price, still ranging, but a nice grind up day. Today, we had some tech names pushing. We had a bunch of names flat. We had a bunch of names selling. So we wind up with trading range activity. Even on, let's see, I believe I was looking at on I think it was the 18th, if I remember right. I saw a really nice one, just to give one more example. So this was an interesting one. On the 18th, we big gap up on ADD, a lot of buying overnight. However, the market actually hardly even moved. We closed 628, we opened what, 628.80, something like that. So we didn't get a lot of movement. ADD instantly started selling. And we can see, throughout the day, I'll zoom in a little bit so it's easier to see. We can see we chopped around. ADD was just getting crushed. Things were selling, things were selling, things were selling. Ignore these indicators on ADD. Things were selling and we were strong trending down. This was telling us that the market had a very good chance of selling before the market started selling. And then as we can see, crushed, crushed, crushed. And when we finally start chopping out on ADD, we finally start chopping out on the market. So like I said, with ADD, you don't need to be poring over it every day. Take note of trends, is the most important thing you can do. Take note of above the zero or below the zero. If we're seeing choppy to uptrend above, you can look for buying in the market. Choppy to downtrend below, look for selling in the market. The only other thing that I will frequently take note of on ADD, and I hinted at this a little bit earlier, is overbought and oversold conditions. It depends who you ask on what actually becomes, an overbought or oversold condition on ADD. I like to think of it at about 1,500. We know when 1,500 stocks, and it's the difference. But when we know almost all of the market is buying and it starts selling, we can start to look for those overbought conditions and a little bit of a sell-off. I'm not going to ever base a trade because there's ADD's ripping or ADD's dumping. I'm just going to use it if I want to say, because you guys all know I watch Apple, Amazon, Microsoft, NVIDIA, XLF, XLE. Those are what I watch every day to get my read of the market. Well, if I want an even bigger read of the market, ADD is what I go to. So does everybody get that? Like I said, it just shows you, is there more buying or selling going on in the market? Easy way to identify overbought, oversold conditions. Yeah, 1K, 1,000, it all depends who you ask. Really, that's the truth. Anything over 1,000 is likely getting into some overbought conditions. Does not mean short the market, but it can potentially mean look for a little bit of pullback or a range. But yeah, I think that's, a great way to go about it. Honestly, if you, like I said, don't do TA, but like 1K, maybe set an alert, at your plus thousands, minus thousands, maybe hit your 1,500s as well. And you can start to say, okay, I'm becoming less of a buyer or seller or whatever it is as we really start to push into these more. And so everybody get that? It's relatively simple, it's just another tool to help you analyze the market. Not seeing any questions. Okay, so with that, next one we're going to talk is tick, TICK. It's going to be the same thing as ADD. You got to do a money on Thinkorswim. You got to do a money sign, and then you got to type in tick. So tick is even more aggressive. And I'm sure you guys have all heard me talk about B bands and things like that. It is the most horrible chart you can possibly look at. As you guys can see, just total barcode, total mayhem. Well, it is showing us things. And this is one that while I won't, ADD for me is more of a market-wide confirmation. Like I said, I won't necessarily take trades off it or anything like that, just based on ADD. Well, tick is a little bit different. For me, tick won't be the only thing that I will use for a trade, but I will use it for additional confirmation as part of a trade. Whereas to me, ADD doesn't, it doesn't count as confirmation to me. Tick definitely counts a little bit more as confirmation to me. And so what is it showing us here? What is this like hideous, like barcode chart? Like the daily is like you're hard pressed to find an uglier chart than this thing to look at. But like I said, valuable information. You'll notice again, zero line, positives, negatives on it. It's doing the same thing, tracking 2,800 stocks traded. I think it's 2,800. Anybody feel free to Google me if I might be wrong. But I think it's 2,800 stocks. And what does it tick? A tick in the market is a purchase. I mean, it is, you buy, and that is a tick in the market. So it shows up. So tick is tracking upticks and downticks. And so what is an uptick? Let's say I want to buy a share of AT&T and it's trading at $28. Right now the price is $28 and I buy it at $28.01. That means I bought it on the uptick. It was going up and I purchased it. So that is going to count as an uptick. That's going to be green on your chart. A downtick is going to be if it is below the asking price. So if the market is going down, then you are going to be getting down ticks on the market or, all these stocks as a whole. Well, you have to remember how many like appalling number millions of shares amongst these 2,800 stocks are being traded every second. So as you can imagine, tick is very volatile. Things that I will take note of when I look at tick. And again, these aren't, I won't watch tick all day. I do oftentimes have it pulled up, but when something happens in the market, and I happen to have a good example of it, when something happens in the market, I know that time is when I want to look at tick. So I have a good example for it. We'll get to that in a second. But the things that I want to take note of are, again, the zero line. Are most of our candles green and closing above it? We assume most of the market is ticking up. Are most of the candles, red and closing below it? We can kind of assume that there's some selling pressure in the market. That's one of the main uses for me. And I like to just scan it, glance at it real quick, see, and your eyes will get used to it. Here was obviously a more selling day in the market. Most of the time was spent under that zero line. This is different one. Looks like a lot of the time was spent over the zero line. Lots of wicks on the bottom, So it just gives us that quick read of, are people buying? Are people selling? Well, this is the one that I love for overbought and oversold conditions. And again, this isn't RSI overbought, oversold. This is, whole market analysis. Did we have a little too much selling go on? This is my favorite way to identify it. And this is where that confirmation comes in for me, where I might personally like to use tick as part of the confirmation of the plan. So you can see on this one, as we just did on ADD, I actually have the 1,000 lines already marked. And that is because to me, anytime, and I think this is pretty universally agreed on, anytime we are ticking above 1,000 or ticking below negative 1,000, we're overbought or oversold. I'm sure if we zoom out, we'll add a little bit more time, you can see that if you get outside of here, you start to see bounces. If you get outside of these highs, you are definitely seeing rejections in the market. We don't spend a lot of time below 1,000. It is very rare for candles to even, well, I mean, that one opened under it. It is even very rare for candles to close outside of those because the market has a way of making itself right and getting itself in balance. And so this is my preferred tool to use for those overbought and oversold conditions. And so when might I use this? Because as I said, this is like, there's a specific time in the market where I will look to take trades based on this. And not just based on this, but so we actually had one in yeah, I do. I like to look at the breadth charts. Generally speaking, we're actually going to touch on it for just a second. Generally speaking, if I want to see breadth, I want to see it for the S&P, so I check out RSP. That's my go-to for it. But so I have a good example of the tick trade right here. So
Do you use it in the
yesterday,
5 minute or in the 15?
you can look at it on at whatever you want because you're basically using it for, and good question there, Narvin. If that was Narvin, I think that was Narvin. You can use it at whatever you want. It's not something you want to stare at all day because look at this thing is hideous. Like I wish it was we were trading right now so you could see how it moves. Watch it move for 5 minutes and you'll be done staring at that thing. And so
You know what this reminds me of? It reminds me of SH.
it reminds you of what?
SH. It's like a vol
Oh yeah.
ETF.
Yeah. Uh-huh. Yeah. Yeah. Doesn't do anything. Yeah. Okay. So um, how can we use tick in our day-to-day trading? And so I used it personally yesterday on a trade. I don't know why this is giving me these terrible. Give me one second. So I used it yesterday on a trade. We had developed this trend right here. Okay. Market was pushing up. It was pushing up really nice. If anybody was in voice chat with me yesterday, we did. I mean, we caught these in voice chat. See this knife right here? Here it is on tick. I saw these oversold conditions. I saw this crush. And this is one of those times where when you see yeah, I don't want to say extreme volatility, but you get a buck 20 candle down, nice candle down. Of course, if there's news behind it, I want to see if we can get some oversold conditions and potentially try to buy that dip. Again, you have to, you need multiple things lining up. You can never just use tick. But I looked at this and I said, okay, crater on a little bit of news, straight to an EMA, straight to a trend. We even have another EMA right here, and extreme not extreme, but plenty oversold conditions. I buy. And so we did. We ended up buying right here and ended up catching this really nice move on QQQ. This is just a great example of where you can use it in your intraday trading. Again, you can't just say we're oversold because sometimes you're oversold for a reason and everything in the market is selling. But when you get, a few of those forms of confirmation, as I recall, a bunch of the big names were lining up and just pulling straight back to support too. You get that all lined up and you take that trade. And it's a, I don't want to say low risk because oftentimes you're buying a knife or you're shorting a ripper. We can even see this candle right here, it touched the overbought conditions. I'm not saying that's what made it sell. This was a news candle on the way up. I'm not saying that's what made it sell, but it lines up where you can maybe find yourself a little bit of a scalp. Obviously, you aren't looking to just buy this knife and run these things all the way to 565 or whatever in the after hours, but you buy this knife, you catch a really nice scalp up to that previous resistance and hop out. And tick is just a wonderful tool to say, okay, whole market is oversold, whole market is overbought, whatever it might be, and run with it. And you'll see sometimes you won't get a reaction. I mean, I should have looked for one where maybe it didn't work very good. Oh yeah, like it looks like, let's see, what day was this? This was the 21st. Oh yeah, so here's a point where we got super oversold conditions right here. Yeah, basically right here. We caught this tiny bounce up. That was it. That was all the market needed to get itself back into balance. And then obviously we never broke above the zero. There was still more ticking down in the market going on. So it's not some foolproof, you hammer it anytime it lines up, nothing like that. You can even see here, big overbought conditions met with selling while I better make sure I'm on the right day. Well, market's ripping, so you just want to look for that unexpected volatility and use it at those times. Otherwise, just use it as okay, like, is there more selling? Is there more buying going on in the market? That's it. You'll have days where you can see Tick spent a bunch of time Tick spent a bunch of time under that zero line while the market just kind of grinded up and bounced all day. Of course, we eventually got that selling as we got those hard sells into close, but really just use it, sparingly. None of these things are, cut and dry 100% overbought conditions on VIX or on Tick, short the market. It's not going to work like that. Oftentimes you're going to get blown out, or your trade's just not going to do very much. But use it at those, more unique times where you see a little bit of volatility in the market. Maybe you see a strong buying day and then you get hit by a hard sell out of nowhere down into oversold conditions. It's the market resetting itself. So you can take and understand it's risk. You're putting on risk, but get a few things lining up, and it can help you in some of those trades. So does everybody get it? Let's see, any questions here? Yep, Dan, it's pretty sweet. I mean, it's just, another instrument in the market that can help us a little bit. Yeah, I will say yes, generally there. As far as news candles can be a helpful one. Can also show you that buying is showing back up or selling is showing up or whatever it is. But I like to use it, for just unexpected, even if it's not news. Just one of those hard little sells intraday or hard buys that we get to short, news or not news, just unexpected volatility at a point where you wouldn't like. And again, you never know what the market is going to do. We try our best, but some unexpected volatility at a point where you really didn't expect that volatility, no level, no whatever it was. And then you kind of look for those oversold conditions and say, I'm buying that knife, or I'm shorting that rip, whatever it might be.
Yo, River, I have a question. Especially with this market, we see anything get sold off pretty heavy, and then it automatically gets bought up by the buyers, and we grind higher.
Yeah, and I mean it's a dip by market, as I've been telling everybody since April. That it's a dip buyer's market no matter what. People need to quit chasing calls at the highs. That is a guarantee. We're seeing a lot of people really not capitalize on what this market is offering because they're buying these kinds of candles, longing these kinds of candles, seeing deep red, and then being happy when they make some money at the end. We are dip buyers. We aren't rip buyers. We're dip buyers. That's what I've been trying to teach everybody lately. The amount of money you will save yourself and the amount of extra money you will make by just waiting for a pullback will outweigh any breakout that you try to buy early by 1,000%. So we're dip buyers. We
Would
aren't.
that be kind of like bottom fishing?
I mean, yeah, but not like you do, where you just shoot from the hip and say, okay, I'm buying this $40 out of the money SPX and hoping we get a, 30-point rip into close. You have to,
Oh,
you
that looks
buy,
spicy.
you buy dips for a reason.
No,
You,
like pretty much yesterday, River. Like if you saw pretty much Spy and SPX, literally like the market looked like it was about to fall apart, and literally right at the day's lows, they bought it, and it literally ran up.
well, yeah, but that's because like, I mean that, people are, people don't look at the market, like, okay. QQ, we'll just use QQQ as an example. Okay, right here, I don't even have it on the chart because you need 560 on your chart. Okay, you double bottom. If you were looking short past here for anything more than a scalp, you were wrong. I'll tell you right now, you were wrong. Market double bottoms, even, I know not everybody trades these, but this is what we were watching in VC. Little micro three push wedge into a double bottom that is technically a higher low, not much of a higher low. This is my favorite setup in the market and was a super easy long. We actually had this one. I mean, I missed this one today.
That,
Uh,
and that's pretty much like you enter at the day's lows, and your stop is below day's lows, right? And you just write
yep.
it.
So this one today, just to show, and I was actually kind of paying attention to tick that we were getting. So this one actually lines up well. That we were getting kind of clobbered here. Like every time we were pushing up, we had a lot of red candles going on tick on the way up. So I did again. I like three push wedges. I know not everybody trades those or anything. All it is three legs in the market. One leg, two leg, three legs. Markets often like to reverse. We shorted this candle, got blown out, got blown out, got blown out. Stops were over high a day. No, that no questions asked. Eventually get the breakdown with the retest. We run it all the way down. when everybody's screaming, short the market, we're cashing our puts down here, because we actually got the reshort at VWAP back down. We're cashing our puts down here, and you can go find my post in trade floor. Should probably buy calls at the hourly 20 at 9:25, well, 9:25 West Coast time. When everybody thought the market was ready to die, you have to look and say, nah, the market's setting higher lows. We got some big buying down here on these lows on tick. We want to be dip buyers here. So yeah. So does SPY follow this or the Qs? Technically neither. This is the New York Stock Exchange. So this is 28, I believe it's 2,800. Like I said, feel free to Google me. These are tracking 2,800 stocks. SPY's got like 503. I don't know how many QQQ has 100, the NASDAQ 100. I don't know if Q's got the same 100 in them. But this is many, many, many more stocks, many, many more things. Yeah, would the tick spike hard on news? Absolutely. So we can see, was that just yesterday? So we can see both times yesterday. Oops, let me go forward. So yesterday, this was like the Japan deal that we're now learning is not really a deal. Here is the tick hitting overbought conditions from basically been going sideways. Here's the tick hitting overbought conditions off of this news pump. Same as here, news, a little news drop, nice lineup at the double top for you too, but little news drop to oversold conditions. So this, you'll see it happen. Extreme buying or extreme selling, like when this candle was like going, it was wild. It was like let's see.
Yo,
I went
River,
to the 1 minute.
since you're
Never
talking
look at the
about
one
the
minute.
Japanese deal, um, I've
Nor
been
we aren't
following
talking
this.
Norvin, we aren't talking the Japanese deal. We're talking tick right now. Look at these candles. Heavy, 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 aggressive selling for a whole minute. Another minute, heavy selling with extreme buying off the lows. We went from and this is taking the difference because you got to subtract your advances from your decliners. So 1,000 stocks declining, we had 400 less in one minute candle, and in 3 minutes later we had gone from 1,000 stocks declining, or the difference of them, to 100 stocks advancing. So the 1,000% run up, buyers showed up, and tick identifies that early. I'm telling you right now, please don't ever go look at tick on the 1 minute. That was just for example's sake. But God, I love Norvin. If you guys don't know, that's one of my good buddies. That's the only reason I'll yell at him like that. So everybody get tick? Any other questions there?
Yeah, this is my first time learning about this tick stuff, and like I kid you not, bro, it's kind of confusing, but it's, like once you get really understand what it
Oh,
really does,
it's
it helps a
super.
lot.
You're right, Norvin. It is super confusing. But that's why I've tried to emphasize a little bit, don't pour over this thing. This is just a unique little instrument in the market to give you insight into big picture. It's not something you need to trade all the time. It's not something you need to watch all the time. It's just a unique way to look at the whole market at a glance and say, are they buying more or are they selling more? When you really break it all down, that's really all we're looking at here.
You think it'll be kind of similar to like the 10-year or the VIX, or you think that's a
Well,
little
we're
bit
gonna get into
more?
VIX next. No, completely different, because this is like you have to think. As I said, I could be wrong. 2,800 stocks or whatever. This is tracking where every share is ticking amongst 2,800 stocks, and so you start thinking about how many millions of shares are traded on 2,800 stocks billions of shares realistically every single day, and this is telling you, were they going up or were they going down during the last transaction? Like you can look at, if anybody doesn't know, so this is tracking all the ticks in the market. This is a bit of a tangent now. But if you didn't know, you can go to time frame, you can go to tick, and you can look at ticks. So if you move this down to tick, and this chart's going to be insane. You move this down to tick, and this is showing you every single transaction. I shouldn't have done this. My computer's probably going to hate me for it. This is showing you every single transaction on SPY and where they happened. This is like, so this is probably mean of me. So like when people say they take a trade, and they took an entry, and I ask myself, hey, that seems a little bit questionable. Then I go to the tick chart and I say, well, that's interesting you bought that because according to the chart, nobody purchased it at that price. So if I'm ever questioning your entry, that likely means I went to the tick chart and something is not adding up because this will show you every single transaction in the market. Do you need to use a tick chart? Does it offer some benefits? Maybe, if you're
Is that like kind of like insider like reading of flow?
no, it's just the transactions. It's just the truth. It's, what I always tell people in the stock market, one thing that will never lie to you is the chart. The chart is 100% truthful. It will always tell you the prices things were bought and sold at 100% of the time. So all that tick chart does is show you in extreme detail where those purchases were made. Let's see. Any other questions here? Uh, they're like last, Johnny B, if I'm being honest here. As far as like importance of things that I care about, it's like a more cherry on top sort of deal. Everything, like, and again, I'm only using this QQQ example because I used it. So it's fresh in my mind and I can talk about it. This one, I hate that it keeps loading that weird study set. So this trade that I took right here, again, and we took in voice chat, this had everything I care about. This gave me a very obvious entry point. It had multiple forms of support right here. I knew it had VWAP under it. I knew if I get long somewhere down here, my stops are going to be under VWAP. I'm risking 20 or 30 cents. I'm looking for, at minimum, basically a move up to the hourly 20, So I'm risking my 20 or 30 cents to make my 40 or 60 cents on the other end. It happened to work good. For this one, it lined up beautifully. So I get a look at this. Whole trade plan's good. Everything's there. And like I said, I believe there was big, a lot of the big names just sold straight to a big support. So whole normal trade plan was there. And then I get to say oversold conditions in a big way on tick. So that's about it. Yep, and just like Crash said, yep, just like Crash said, it's I have it up. Should you have it up? I mean, that's completely up to you. Like I said, chart's hideous. It's horrible to look at if you don't like it. If you never look at tick again, no big deal. But it's just a nice little way to get that big picture view of the market. Okay, so any more questions here? I feel like I got them all. We're good. We're good. Okay, so final one that we're talking, and I might get criticized for this because maybe people disagree or whatever it is. But the final one that because maybe it is a market internal, maybe it isn't a market internal, I lump it in with them. So we're gonna look at VIX, and this is the volatility index, VIX. People talk about it all the time. Uh, I'm going to tell you right now. Um, I have never heard somebody and like I've never heard somebody in OOT discuss the VIX in the correct way. I think many people don't understand what it is, what it represents, how it's calculated, and what does it mean for our trading. Um, you know, the main things that you will hear from people when they're discussing the VIX is, well, if VIX is going down, market's going up. And that is true sometimes. I believe statistically, about 30% of the time, VIX in the market will have a similar overall direction. There's times where, of course, we had, a lot of people don't even realize this because nobody looks at it, but we had a nice little pop on VIX here a few days ago with that sell-off. Well, now as we've started to buy up, it's obviously going back down. Well, here's the thing with VIX, and I'm gonna take all these off just because I have to emphasize this. If you're trading VIX, you do not do technical analysis on VIX. It does not work like that. There aren't bull flags on the VIX. There aren't double bottoms on the VIX. That is not how it works. What the VIX is telling us is that based on a strangle of the front month SPX contracts. So what do I mean by that? So I don't even know what SPX is trading at. I never look at that bullshit. But SPX, we're trading 63.63. If you go to the month out, the next monthly expiration, your August monthly expiration contracts, and you get a strangle and you find the difference, then that's going to give you your VIX. And it's, it's not going to be the exact number, but that is the math that they are going to use to identify the expected volatility. And that is what VIX shows us. And so when we have a low VIX, what you're going to see on those front month SPX contracts, they're going to be a relatively tight spread. The prices are going to be close. There's not going to be big old blown out bid ask spreads on them. We're gonna have some expectations there that are easy to do the math. You go back here into April during the tariff tantrum, and they were massive. We had VIX up here at 60. The spreads on those SPX contracts was thousands of dollars wide. And that is telling us that there is extreme volatility expected. So this is where a lot of people start to get confused. They start trying to do TA on it. They start trying to, oh, look at this trend line break on VIX, blah, blah, blah. And they don't ever zoom out to the big pictures. VIX lives life at 15 to 20. That's great. That's normal volatility in the market. Obviously, you start looking at 2022, we had an elevated VIX because we were in a rate hike environment. You look at the COVID spike, obviously, very, very big spike. The entire world was shutting down. For the most part, VIX lives life 15, 20 bucks. And what does that mean? And this is where, you know, so like, this is where everybody gets confused and where I think that like people put too much weight into VIX. And not only do they put too much weight into VIX, they don't actually know what they are talking about. And so I'm trying to find my cheat sheet real quick. And this is posted in my tab. Oh, it's in this one, maybe. Give me 1 second. Maybe. Uh, there we go. Okay, so VIX cheat sheet. What does the VIX actually tell us? Because a bunch of people think like, oh, it's telling us, this volatility, blah, blah, blah. Here you go. Here's what the VIX is actually telling you. People trying to say, oh, VIX is crushed. There's no volatility in the market. Well, I hate to tell you, bud, the S&P's up $9 this week. There's plenty of volatility to be traded in the market. It is telling us what does the market expect over the next 30 days. So it's very cut and dry. Here's the ratios. We have VIX at $15 right now. So what this is telling us, and here's the real probabilities, is there's a 68% chance that we will be up or down 4% over the next month. That's it. It's pretty reasonable. It makes sense. These are like, it's very valid. You can see a 99% chance we'll be up or down 12%. I mean, it's basically a guarantee we aren't going to be up or down 12% over the next 30 days, So this is all that it's telling us. So as you can see, as the number gets higher, the potential for volatility gets higher. So when we have these massive blowouts on VIX, like we had, VIX to 60, this thing doesn't even get there, but it is telling you that over the next 30 days, it is expecting we will be, whatever it is, plus or minus 15%. So if we go back to, or if we, pull up SPY chart right next to the VIX, we'll go to the daily. Hopefully we'll go to the daily. Here's where, the VIX was whatever, it was at 60 on, yeah, we'll call it the 8th or so. Let's see. Yeah, it's 50, 60 on the 7th, 8th. So here is the 7th, 8th of April, right in here. And, VIX tops out at 60. So basically what they're telling us is that we're going to be up 15% 30 days later. Here we are sitting May 27th. Well, I guess technically I didn't even need to go that far. Back here. Here we go. May 12th, 1 month later, 16% up. They're good. These people who track the VIX are good. Like that's like they know what they are doing. They know how to price these contracts correctly. They are very, very good at doing it. So all that the VIX is telling us is how much movement does big money think we can have over the next 30 days? And it, of course, tells you up or down. You don't know what's going to happen, but what they are looking at is the many millions of dollars going into those hedges and those spreads on SPX because, real traders don't trade SPX. They hedge with it. They do spreads on it. They do those kinds of things, collars, they don't day trade it. All they are doing is they are analyzing those millions of dollars that went into those SPX contracts with a month of time and saying how much volatility can we expect and how much money are people putting into this to bet on that volatility. So that's all the VIX is telling us. You basically have no business looking at the VIX intraday. Can you look at the VIX intraday? Can sometimes you have a day like today? Today's a funny one where, it worked, the VIX started ripping, the market started selling. Can it work like that sometimes? Absolutely. It can also rip up while the market rips up, And so, that's the other thing that people don't ever take into account is that all this thing is telling us is volatility. You can't say double bottom on 15 double bottom on VIX at 15. I'm short in the market. You're going to lose all the time doing that. So all you want to do is say, where's VIX sitting? How much volatility can we expect? Now, the second side of VIX. Does everybody get that? Like I said, relatively useless intraday. You can look at a big picture and say, okay, obviously buying pressure is showing up in the market and the VIX is coming down. We're expecting much less volatility than we had. That's what VIX is really telling us here, The other thing that VIX does and controls is, well, I won't say controls, but when VIX is elevated, that means IV is elevated, implied volatility. And so, implied volatility is one of those ones like, your ER trades and things like that, where you get wrecked by implied volatility. When VIX is extremely elevated, contracts will be extremely expensive. We all remember back in April, when we were trying to trade SPY, same day SPYs, $8 out of the money are $600. You catch a $5 move on SPY and do like 20%, 10% on the contract. They weren't paying very good. That is because there is so much volatility priced into the market. So those contracts get super expensive. So that's VIX. Don't get sucked into, VIX is weak. So, and just going sideways so the market isn't moving. If you think SPY going from 626 to 636 in the matter of 3 days, if you can't find out how to make a couple of bucks in that, don't blame VIX. It ain't VIX's fault. It's probably your fault. At least that's my opinion on it. Plenty of movement can happen here. Basically as I said, what they're telling us right now is over the next 30 days, they are currently pricing in, a 4% move on SPY. And so that's, SPY's $600, $630. So I don't know, quick math in my head, they're pricing in a $25 up or down move on the S&P over the next 30 days. Plenty of volatility to be traded in there, and VIX tells us what to expect. So with that, any questions? Oh well, we only got a few minutes left. Any questions, any concerns, anything that you didn't understand? Oh God, here we go.
Hey, River, it's 1K.
It's happening.
Wasn't really on your topic list tonight, but do you care to share a little insight on end of the day MOC? It's kind of on the same topic, kind of not.
Yeah, we could touch MOC.
I just always find it fascinating
I
sometimes.
don't know how to show it. How can I show it?
maybe just talk
maybe
about what to look for when it comes up, and if you can like
yeah,
not
I actually
necessarily
like that.
swing based off it, but what it could maybe tell us internally. I don't know.
So let's see if I can find if it'll show it to us. If I can, it's not gonna show me. So anybody who's traded with me in, in VCs, end of day, um, and an order show, you might hear me discuss, okay, market on close orders are about to show up. And I'm happy you brought this up, okay, because it is, I don't want to necessarily call it a market internal per se, but it's a picture into what is going on in the market in the last few minutes of the day. And so when does the market on close come out? It is released 10 minutes to market close. So we've all seen and experienced that, the second 350 hits, we see extreme volatility. I mean, Apple had a good one today. I guess I don't know what happened. Knifed, bought back up. What is the market on close showing us? Well, MOC is actually it's a type of order. You can place one, I can place one, we can all place one. It's market on close. So you market order out of your trade at the close of the day, but you can just set the order and let it work. I do not recommend it in any way, shape, or form due to this volatility that shows up. So there's this tricky double-edged sword of market on close orders. All the hedge funds, all the market makers, everybody, they start getting those 15, 20 minutes before it's released because they are quite literally the people that have to fulfill those orders, whether it's buying the sell orders, selling buy orders for people. They have to fulfill all those orders. So they get the information. Well, it causes extreme volatility. Might not be huge, but oftentimes can lead to the big move, the biggest move. Sometimes it can just be a little bit of chop like this. That's what we had some QQQ calls for it today. And they popped like up like 20%, instantly down 40%. I took the stop out. Well, you have to think. There's a lot of orders and a lot of people trade like this, and big money people and like real day traders with a lot of money. Many of them will use market on close orders. Well, very often they are going to try and find themselves at VWAP. And all of you have heard me talk about VWAP a lot because it's important and it's a level that honestly big money people watch and everybody watches on the day because it is the volume weighted average price. So as we know, big money is the volume in the market. It's their algos and blah, blah, blah. So VWAP is the average price based on volume. Well, when the market on close orders come in, oh, now that I think about it, I wonder if I can still show you from today. Yeah, I'm on the right one.
Yeah, can you pull up Trade Flash or will it show that?
It should. I wonder if I still got it. Okay, so, well, hopefully. Oh, I wonder if I can. Sorry, I apologize. Give me a. Oh, wow. Detach gadget. So this little thing right here, it's called Trade Flash on Thinkorswim. It just shows you some big, like unique orders. They're more often than not, they're spreads, things like that. Well, right here, MOC, SPY market on close, 2.2 billion to the sell side. And so what does that mean? It means that a lot of people are closing out trades. $2.2 billion worth of trades are trying to be sold going into the close. So we can see this is where that candle shows up, and it's not always going to work like this, but they will very oftentimes try and bring you to VWAP. So if you're below VWAP and you get those sell orders, the market can pop to VWAP where they want to be selling you these at the average price. End up delta neutral, don't lose money, blah, blah, blah. They want to sell it to you at the average price. So when we see 2.2 billion, oftentimes you can see a little bounce to that VWAP, and then the sell orders really start filling and the market will come down. I will say, I saw one, we had one 2 weeks ago, 4.1 billion to the buy side. So you would think they're going to rip it into the close. They pulled us back to VWAP, held it there for 1 second, cratered us below it. So all of those buy orders were actually getting bad fills. Well, it depends how you look at it. They were getting filled on the way down. So they weren't getting the best fills. So it's not something that you can exclusively take trades on, but it will very oftentimes give you a hint of what the market is going to do. No, Jomo, yes and no. So if you're like, I mean, no, because we don't matter that much. You know, we're talking $2.2 billion just today. I mean, this is $2.2 billion on the S&P right here. You know, that's $2.2 billion right there. So we're never going to affect it. And especially like those Robinhood closes at 12:30, that's about the time. Oh, sorry, I'm West Coast time. That's about the time the big money is starting to get those orders. You know, sure, we might be closed out if we're like deep in the money on something and we don't have the money to buy those shares or whatever it is. But generally speaking, no, this is big money. Like if I see 400 million on the market on close, I'm like, oh, that's tiny. I don't care about it. You know, this one today, big enough, couple of $1 billion. Had I been a little bit more on it, I would have cashed my QQQs and shorted that as soon as I saw it. You can see one of the issues right here, 1251. They don't give it to you right at 1250 oftentimes. So sometimes you can't even react quick enough. But it is, again, I'm happy 1K brought it up. Another just unique little thing to say, okay, a lot of people sold. So maybe I should consider trimming positions. You know, if 2.2 billion sell orders are going through, maybe I should consider trimming positions and I shouldn't feel very comfortable taking trades home with me. And, you know, I think we got PMI or something tomorrow. So it makes sense to not be heavy over the night into unknown data tomorrow. Yeah, he did try to make those millions and he just didn't even know what was happening. It's like the same one. So at 7 o'clock, whatever, 10 o'clock, you know, everybody always talks about 10 o'clock bullshit. Well, in reality, those are the tail end of MOO orders, market on open, where people have marketed into the market on the open. So they're going to be getting filled for those first 20 minutes. And then there is always every single day internal market release that again goes to hedge funds, market makers, blah, 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 things like that, to tell them the amount of liquidity that they expect they need to provide during the day. And so that's 10 o'clock bullshit is in fact just internal market releases that happen every single day. So it is a real thing and it does happen every single day and it happens for a reason, you know. And oftentimes we can even get some data packed on right there, so it just goes wild. Okay, well, that's going to do it, everybody. Unless you got some more questions. Nope. Okay. Well, right on, everyone. Thank you all so much for coming. I know this is kind of a weird thing to talk about, but definitely just a unique little thing in the market. Hopefully you guys learned something, and we will catch y'all tomorrow for a little bit of Friday fun in the mornings. Right on. Thank you all so much. Yep. Thank you, everybody. And we will talk to you guys soon. Yeah, facts. What's that thing doing? Let's get that thing up tomorrow. Yeah, let's get back. Oh no, that's MU. Yeah, that's not what we want to see. That's an ugly breakdown. Yep. Okay, everybody. When do you become profitable? Probably when you start sizing down and setting stops above entry. That tends to be when most people start making money. Or if you really just want to make money, just follow 1K's tab. Okay, right on, everybody. We will talk to you all soon. Have a great rest of your night. Thank you.